Hello everyone, thank you for watching this video. This is going to be covering geopolitics, cryptocurrency, and how to be grateful. Basically, the initial thought I had was to make a video to reflect why we should all be grateful for things like HEX and other things in your life that you could be grateful for. There was no need for Richard Hart to even release HEX at all, for any of us to experience this life-changing wealth. Yes, it's pulled back a little bit, but dips are in the game. I remember myself not listening to other people who suggested maybe it might be a good idea to take like maybe a year's salary or something like that, enough to survive for a year. I was too happy at the time to even listen or pay attention. I really wish I listened better during that period. But again, you could get frustrated at people, you could get frustrated at yourself and others. But in the end, I think being grateful is a good skill to learn. That being said, we'll have a quick look at the HEX price, and we can see a lot of people are selling. So I'm not sure why at this particular moment there appears to be like 10 plus sells, but it is what it is. That's all I have to say about that one. If we have a look at the HEX daily stats, I like it to check the gas fees, how much a swap would be, how much it is to add liquidity, etc, etc. Surprisingly, in this huge bear market with the price of ETH very low, the gas fees still aren't overly cheap that I would imagine them to be. So when HEX was initially released, like 2.5 years ago, it was a lot cheaper to do all of these, to transfer, swap, add liquidity. Prices have still not come down, so I'm not sure if Ethereum is broken or what. We could have a look at these stats, but this is probably not the video for that because there's many other people who will cover this. Big red bold writing on this particular website generally indicates the content creator feels that this is an important article to look at. Funnily enough, after all the Celsius news, here's more of it. Basically, crypto firm halts withdrawals, Bitcoin plunge, 0.75% rate rise this week, and Fed nightmare, inflation or recession. So let's have a look at this stuff, because I'm pretty sure you can see how these all might be linked. Another thing I found interesting was an engineer felt that AI now feels. But yeah, that's probably another video. We've got power facing choice between elevated US inflation and recession. So the quantitative easing that took place, they are now quantitative tightening, and they have a difficult situation. It is either let prices increase, continue to increase, or inflation that we all is probably the key word that people are hearing all the time, or let a recession kick in. So what do I mean by that? It's basically saying prices are getting away from the prediction because they didn't forecast that inflation would be a problem. Now they're saying, well, it is a problem. Prices, inflation is getting out of hand. We need to increase rates. Increasing the rates is probably going to trigger a recession, if not already. Basically, a recession is when GDP retracts. It does not increase. That is a recession. How does that affect the cryptocurrency market? The participants in a cryptocurrency, generally, I guess the retail participants and even larger institutional participants, all rely on their available capital. If there is a recession, if prices are more expensive, if the mortgages, the loans that they have to pay on their mortgage, those interest rates are higher, they're going to have less capital to deploy and less money to be able to buy things with outside of the initial core living expenses. Arguably, you could say cryptocurrency is not a core expense for some. I found it fascinating. The first thing I did was check MarketWatch before, and this was right up there. Crypto lending platform Celsius pauses withdrawals, transfers, and amid extreme market conditions. Now, we all kind of know what happens, but funnily enough, if you skim through this particular article, it doesn't even begin to mention, that I can see, any actual chain analysis. Nothing. It's crazy. And then we have within the same website, MarketWatch. Nothing against MarketWatch. It just says, don't blame the Fed. Crypto assets are hardwired for harsh collapses. Really? Is that the case? Do they explain the intricacies of the cryptocurrency market? I'm not sure they do, but they probably feel like they present a wonderful, wonderful narrative as to why cryptocurrency is set to crash. Now let that sink in. We have an article explaining to us all why it's not the Fed's fault that crypto assets are going down. Nothing to do with their monetary policy, nothing to do with their forecasts regarding inflation. They said inflation was not a problem. There's going to be no inflation problems. People in the space have forewarned about these events, but no one cared because some outlets said, don't worry about it. Or even in this case, some mouthpieces like the Fed said inflation is not going to be a problem. Let's look at today. It is a problem. Looming recession. Going back, Treasury Secretary Janet Yellen issues serious crypto warning as sudden price crash hits Bitcoin, Ethereum, BNB, Solana, Cardano, and XRP. Now, this is after the Luna crash. This is on top of the same person saying inflation is not going to be a problem, so we're going to continue with our monetary policy, which allowed for assets like crypto to thrive. Then you get an article saying it's not the Fed's fault that what they did, it's not their fault because they did that. I'm kind of scratching my head there because it kind of feels like an engineered, not narrative, what's that word? An engineered signal to the markets to say crypto not so good anymore. Why else is that? Because I'm pretty sure the next article explains that more hedge funds are investing in crypto, but they're still reluctant, basically explaining that little trend that is taking place. Where is it? It's an article that actually says it's better to not invest in cryptocurrencies for your future. It literally says that. It might be here. It says, quote, U.S. Treasury Secretary Janet Yellen has warned against including cryptocurrencies in retirement plans, calling them very risky. Quote, very risky. But there's no intervention from the Fed directly on cryptocurrencies as a whole. Not just HEX, as a whole. Not just Luna, not just Celsius, as a whole. Makes me wonder. This came out as well 12 hours ago after just coincidentally, nothing planned, nothing logical, but after the Fed announces this, after there's various articles in the trusted outlets, news outlets that cover financial markets. After this comes out, it explains that Bitcoin is dropping and the overall market cap of all cryptocurrencies is dropped below 1 trillion. Again, nothing to do with the signaling from the Fed or anything like that. This is more Celsius, basically saying reportedly transferred 320 million worth of crypto to another exchange before they announced they would halt all trading. Excuse me. So much information now, I don't even know. I'm hoping you're keeping up. You might be thinking this is all just crazy conspiracy theory type stuff. Or you might be seeing some things are not always coincidence. Hard to say. But this was pretty cool. There was an actual, someone picked up on the Etherscan, the actual transactions that were taking place. For some of them, not the whole 320 million. I think it was 95. Where is it? 93. Yeah, okay. 93 million of wrapped BTC. So they were sending it out. Where were they sending it? To dump it on the market, to continue on selling. And if you continue on selling, it drives down the price. So for instance, you see, using HEX here as an example, lots of buys, and then you see a sell. Imagine this on the global scale with every single cryptocurrency trade going on, and you have large chunks of sells all going on, putting negative pressure on multiple assets all at once, taking into account Hart's law, taking into account like the liquidity pools and things like that. If the price of everything is being driven down all at once, it's pretty hard to fight back against that, because unless you've got a lot of economic energy to combat that, I don't think that is actually possible at this particular time. Especially when you're getting signals from top news outlets, and they're getting their signals from the Federal Reserve, explain to the world they think, quote, cryptocurrency is a risky asset and people should not invest in it. That's like literally what they said. How much more anti-crypto can they be? And during this time, this is my little conspiracy, during this time, people with lots of money might be able to capitalize on this suppression of all cryptocurrencies across the board. Now, who would have the most dry powder left? If, say, the retail investor doesn't have as much, there might be wealthier individuals who plan better, who do have more dry powder, but to enter it into a falling market, to what dollar cost average in to something that is tanking, I'm not sure that's the best financial move. However, if you're a very, very large entity, you might be able to capitalize on this, because you could come in, swoop up things for pennies on the dollar. Yeah, again, I don't know if that's actually happening, but I can see a bloodbath. Now, moving on. So, how did I get to that conclusion? Is it random madman thoughts? Is there any logic to that at all? The thing that I would like to point out in this particular video is this here as well. It is most likely that the let's have a look. Move that over. Yeah, basically, it looks like the US is going to go into a recession. It's not going to be Armageddon, people, as long as people don't get trigger happy with their nukes. But basically, the signal is recession is likely. Rates are going to rise for the next 6 months at least, to get inflation under control. So during this time, assets are going to be crushed, crypto is going to be crushed, people are going to be struggling to fill up their vehicles with gas, with petrol. The energy crisis is going to be real, and there's going to be food shortages. Now, depending on your neck of the woods, you might be okay. Like I was mentioning in another video, lettuces in some areas like Queensland are $12 because they've had massive floods. They've got this huge they've got inflation and prices are increasing, and at the same time supply lines are stuffed for them because fuel's expensive and there's floods. So the ability for them to ship lettuces is harder than in other states who haven't had floods, basically. So apply that to the global scale. different areas might be more successful and less successful at keeping prices under control. And basically, what else? I'm trying to think of a safe haven. I can't really think of any. I mean, you got HEX that prints itself, but if you can capitalize on that and not dump everything, maybe, as things recover, you might be pleasantly surprised. Not even mentioning pulse chain. But yeah, so basically what I'm saying, US is likely to go into a recession. Most likely the rest of the world is going to go into a recession. Simple as that. The level of recession in your particular country may not be as extreme as other areas in that same country. Is probably what I was trying to, the message I was trying to portray. Now, this is just food for thought. Basically, it's a bit blurry. Again, the sources on this are a bit, I think one's like Reddit and one's like another online website. But it is worth considering that if you have supply line issues and it turns out that, you know, your food line, not real food like fruit and veg, but, you know, like other branded foods, because they're under heavy control of like larger entities and they have like smaller entities under them, then you can see like a pattern here. So if you can understand that concept where you have like a large drink company that controls like all of the other drink companies, then you can probably understand this particular theory here, which is that the same thing applies to media, for example. So you have companies that control various aspects of the media, and it is the larger corporations, like I guess you'd call it the parent corporation, that controls the smaller baby ones, for lack of a better term. And that is my video. Thank you for listening. Hope that made sense. Hopefully you got something from that. And hopefully when HEX recovers, you bought some. And those gains, those life-changing gains, hopefully you get some of them, some more of them. Okay, signing out.